In today's video, I'm going to take a deep dive look into Apple. I'll be using some different technical analysis tools and techniques to predict where I think Apple's price is headed towards next. And after that, I'll tell you exactly which options trade I've taken to capitalize on this movement that I'm expecting. So if you want to learn more about technical analysis or where I think Apple's price is headed towards next, keep watching this video, stay tuned, and I'll get to that shortly. And if you have a different opinion on Apple, I'd love to see it in the comments below. Definitely let me know what you're looking at and where you think the price of Apple is headed towards next. So let's dive right into the chart. I have Apple open here on a daily chart right now. Now for long-term analysis, if you've watched any of my previous videos, you know that I love to use a technique called Elliott Wave Theory. If you haven't yet watched any of my previous videos on this, or even if you forgot what Elliott Wave Theory is, just a brief introduction. It basically states that the market trends in waves of 5s and corrects in waves of 3s. Now there are all sorts of rules around this and different guidelines that you're supposed to follow when you're counting these waves, but we're going to move forward with that basic premise right now. So on a daily chart, when I first pull this open, I do like to add support and resistance lines. And I do this just before diving into Elliott Wave or any other tool or technique. Now I'm going to move forward quickly in this video and assume that you understand what support and resistance lines are, but if you don't, I'd highly recommend you check out my TA 101 or Technical Analysis 101 playlist tutorial series. This will help you understand what the chart is actually showing here and how to understand and comprehend the basic things, starting from if you're an absolute beginner. So let's go ahead and draw some support and resistance lines on Apple. I think the first one is pretty clear right in here. And then of course we have the resistance up in here. And on the daily chart here, there's actually really not that many more than this. Maybe we have one in here somewhere. And then it looks like up in here we have something in resistance there, even though it's been broken through a few times. And of course we have the resistance all the way up at our all-time highs and these few little peaks inside of here as well, along with these few drops in our most recent moves here. So that's pretty simple. We have some basic support and resistance zones where we can expect the price to kind of bounce towards. So if we break below this one, let's say, then it would be pretty likely we head towards the next resistance zone in here. Of course, this doesn't always happen. We could fall somewhere between the two zones, and that would potentially create another support and resistance zone. We also know that the more we touch these zones, these levels, the stronger they actually become in the future. So if we resist a zone for a while like we did with this one in here, and then we came up and had even more resistance through here, if we were to ever come back down to this price, around $81, you know that it would be a pretty strong support zone. So anyways, let's move on to step number 2 here. Let's just pull out Elliott Wave Theory. Now when I'm just zoomed out here, the first thing I'm looking for is where the 1 and 2 waves can fall in Elliott Wave Theory. We know the 2 wave is the biggest retracement, and it's supposed to be at least a 50% retracement, which I'll show you in just a second. On a large scale zoomed out chart here, the main spot that catches my eye as a potential 1-2 is this move up right here from about $36 at the end of 2018 all the way to about $81 in the beginning of 2020. And then right after that, we have a huge fall, as with the rest of the market fell in early February and March of 2020, falling from about $81 down to the low $50 range on Apple. So if I pull out my Elliott Wave Theory, just trying to count the 5 waves here, let's just say that is our 1-2 for now, because the eye test is really telling me that it is. Next, we'd look for the 3 wave, and in Elliott Wave Theory, the 3 wave is the most powerful wave. It's incredibly steep on charts, and it should accelerate more depth than the 1 wave put in. So our 1 wave put in a move from $35 to $81, we'd expect the 3 wave to be an even greater move. And you can see from the bottom of our 2 here to the top all the way up here, it's an extremely steep move, as I was just saying, and it's definitely longer than our 1 wave in here. So let's go ahead and label that as our 3 wave. And then next up we'd be looking to label the 4 wave. The 4 wave is our next correction, similar to how we labeled the 2 wave. However, it's usually less shallow than the 2 wave. Now I told you the market corrects in 3 wave structures, so we'd expect a 3 wave structure in this 2 wave. However, a 4 wave can actually be a triangle as well. It's one of the exceptions in Elliott Wave Theory. It doesn't have to be 3 waves, and instead it can be a 5 wave move that's pretty sideways in nature. Now, when I look at the movement right after this 3-wave here, it actually looks pretty textbook as this triangle, and I'm going to dive into this shortly, but for now, I'm just going to put my 4-wave in here to template that I think this is going to be a 4-wave, as I'll show you in just a sec. And then finally, we should have another move upwards to be the 5th wave of our series. So that would look something like this, where our 4 would finish in here, and then our 5th wave accelerates higher than the 3rd wave here and puts in a new high somewhere up in this range. Again, we'll get into more specific price estimates and guesses of where this 5th wave could be based on our Elliott Wave rules and guidelines, but for now, I'm just putting this in the middle of nowhere, let's say. The price I'm labeling this right now is not relevant, so if you want to see my actual predictions for this, make sure you keep watching and keep staying tuned, as I'll use actual rules and guidelines to get a better price target for where that 5th wave is going to head. So now that we have a piece of this chart segmented off from early 2019 or late 2018 all the way through where we are right now, I'm just going to expand this a bit so that it takes up most of our chart. This is the area I really want to look at, and I want to validate that what I've drawn here is potentially correct. So the very first thing you want to do, and I hinted at this earlier, is validate that the 2-wave actually retraces a good amount of the 1-wave. Now, a 2-wave typically falls as a 50% or up to a 61.8% retracement of the 1-wave. It's not impossible for it to be more or less than that, but those are the values we really like to see. In order to check this, I'm using the Fibonacci Retracement tool on TradingView, clicking from the bottom of our 1-wave, and then clicking at the top of our 1-wave here and pulling this sideways. Now, if you know how to read Fibonacci retracements, you're probably shocked at exactly what you're looking at with this pull right here. But before I dive into more information on that, I do want to remind you that if you like this video so far and you're still watching at this point, do me a huge favor, click the like button and hit subscribe below. All of the content posted on this channel will be similar to this one, and if you like this one, I promise you'll like the other videos as well. This also helps me out and supports me a ton, and I really do appreciate it. So looking back at this Fibonacci retracement pull now, we pulled from the bottom here to the top here, and we're looking for where this 2 might fall in. I told you that we're looking for the 50% to 61.8% retracement. Now these are labeled as decimals in here, so the red line here is our 0.5, which is that 50% retracement, and this golden line here is the 0.618, or the 61.8% retracement. And the 618 is actually my favorite spot to see a trade and take a trade. I have it golden for a reason, and that reason is because I think it's the absolute best spot to enter. And of course, this is in hindsight, but just look how good that trade would have been if you took a long on Apple right at that golden 618 in here. From there, the market only rocketed and accelerated upwards. Now, aside from Elliott Wave Theory, whenever I use Fibonacci retracements, I actually use negative values on these Fibonacci retracements as well. You can see the first negative value is this green line in here. And this is actually my first target when entering a trade. Specifically, when we can enter at this 50 or this 618, that green line is a perfect first target. And what this represents, you can see it's the negative 0.236. It's actually just the depth of the 236 right here, or a 23.6% retracement of our move that we pulled from the bottom here to the top here, down to right here, this light purple line, but then it's flipped on top of itself. So if we just take the depth that this is right here, and then we copy it and put it above the 0 here, you can see it's exactly the same as the purple depth, but on the other side. And I use 3 different targets. So that green one is my first one. The negative 618, so this golden line flipped on top of itself, is my second target. And this red line, this negative 1, which is just a full depth of this retracement flipped on top of itself, is my third and final target. So Elliott Wave aside, had you entered at this 618 and not even known that you were buying a 1-2 right here, this green line would have been the first profit target you'd be looking at. And you can see we actually came up and had a wick on it almost exactly before pulling back a couple dollars in here. We didn't pull back very far, but there is a $6 move right at that line. So you can see it's definitely a significant resistance. Moving up to the blue line in here, you can see that this actually wicks it perfectly before coming back down in the same candle here. So we moved up to about 112 in this candle and ended up closing at about 108, 109. So again, a small pullback. And finally, our third target that I look for is this red line. And you can see this candle missed it by maybe 30 cents in here before we pulled back from about $129 all the way down to 123. So clearly all three of our targets were very significant and they would have been extremely good trades. But again, we're not trying to trade this in hindsight. I'm just showing you the potential of using Fibonacci retracements. So let's go back to validating our Elliott Wave Theory. The third wave is most likely to be an extension by 1.618 of the length of the one wave. Let me show you what I mean by that. Let's grab our trend-based fib extension tool, and I'm going to click at the bottom of the one wave again, and at the top of the one wave, just like I did with Fibonacci retracement, but this time we're actually grabbing the length of the one wave, and it's actually hovering on our mouse right now. The next thing we're going to do is click at the bottom of the two wave down here, and we're going to pull sideways. So this time, you can see that this pink line right here is actually a 1.0. It says 1. And what that means is it's the length of the one wave here, which we got from our first two clicks of the tool, put onto the bottom of the two wave. So if we just pull the length of the one here, just like this, and we bring this over to the bottom of the two wave down here as the starting spot, you can see it comes to this pink line perfectly, minus a little bit of human error there. So as I said, the most common zone for a three wave is between the 1.618 and the 1.75 extension. And I have those labeled up here as this golden line once again, along with this green line that I expect the price to come at in the most likely situation of an extension. And you can see when we came up to this the first time, we did have a little reaction right at that 1.618, and then for about one candle we pushed out of this zone, maybe $3 or $4 above that 1.75 before we had our huge pullback. So yeah, we would have missed the very, very top of this. However, for a move that went from about $53 up to about $138, I don't think you would have been too mad selling around $129 to $134 and missing the top by just a couple dollars in there by using this one simple trend-based fib extension pull. And furthermore, this really validates our third wave. So now, once again, we're going to pull another Fibonacci retracement to validate our four wave. Now with our two wave, you'll remember that we're looking for that zone from the 50 to the 61.8. Our four wave is meant to retrace less than that and fall between the 38.2 and the 50 as our most common zone. So let's pull one more fib retracement, click at the bottom of our two, the top of our three, all the way up here, and pull it sideways. And this blue line is the 38.2% retracement. As I was saying, this is the minimum target we really like to see with the fourth wave. Again, it's possible that it's less than that, or possible that it's more than the 50, as I was saying is our second little guideline. So somewhere inside of this box right here. However, of course, a percentage of the time we don't make it in there by falling short, or we even fall past that 50 sometimes. In our case, you can see the move right away pulls just barely past this 38.2. So this is another really good sign that our fourth wave is either potentially in or being put in right now. So for the most part, we've done some pretty basic validation to say that our 1, 2, and 3 are really good and that our 4 is maybe finishing in the price territory that it is right now. Let's go ahead and dive further into the 4 wave to see what's going on with our price action right now. We know that if the 4th wave was actually in, that we'd be starting the 5th wave, which is another upwards movement. However, you can see that if this was the 4th wave right here, we're not really going upwards. We're actually going sideways. So maybe our 4th wave isn't in from this one move right here, and we're still working on the 4th wave right now. So now I have this zoomed in to just include the price from when we peaked around $138 to what we've done over the next 3 months here for all of September, October, and November, where Apple is pretty much just moving sideways. It's a pretty wide range that we're sideways in, with about a 36-point spread here. However, you can see it's collapsing into this higher low and lower high pattern. In other words, we're just consolidating sideways, and at some point, this pattern has to break. So I hinted at this earlier, but I told you the corrections are typically 3-wave moves. However, 4 waves can actually be triangles and be 5-wave moves. And this one looks pretty textbook to me. If you just count the lows and highs in here, from the top up here, there's 1, 2, 3, 4, 5 little moves inside of there. So my best guess right off the bat is that we're definitely looking at a triangle in the 4-wave here. Let's take a look at what that would look like. I'm going to label this as A, B, C, D, and E. And when we have a triangle in Elliott Wave, we need to connect the A to the C and form a trend line like that, along with the B to the D and form a trend line in here. So you can see that the two lines I've drawn, these blue lines which define the triangle, actually tell us what type of triangle we have. In Elliott Wave, we can either have a contracting triangle where the lines are coming towards each other, or an expanding triangle where the lines are coming away from each other. And lastly, if we have one of the lines actually flat, which would look like a normal descending triangle or ascending triangle if you're familiar with other chart patterns, this is actually known as a barrier triangle in Elliott Wave. Now you can clearly see that our lines are contracting towards each other, so this is known as a contracting triangle. Pretty straightforward. In a contracting triangle, the B wave cannot go past the start of the A wave, which would be up here. The C wave cannot go past the start of the B wave, which would be down here, and etc. through all of the different waves. In other words, we couldn't have our B come all the way up here, above the start of the A. Our C couldn't fall all the way down here, below the bottom of the B. Each of them have to keep falling within the range of the other one, with higher lows and lower highs. And you can see we definitely have that so far. The other thing we can look at is that typically a lot of the waves will fall at perfect Fibonacci retracement values of each other. So if we just pull a Fib retracement from the top of our A to the bottom of our A and pull sideways, you can see that the B wave comes again right at that perfect zone between our 61.8 and our 65% retracement, which we call the golden zone. Pulling from the bottom of our B to the top of our B here and pulling that one sideways, you can see the C falls quite a bit past this golden zone. However, look how perfect it is right at this 786 right here, this blue line right there. So far, both of our waves have hit really nice Fib retracement values. Another great sign that we are in this triangle as we're seeing. Let's validate another one from the top of our C to the bottom of our C to validate this D wave. And look at that, the D wave comes right at our 786, just like the C wave did. And now finally the E wave. While we don't know if this one is in, let's see what the Fib retracement pull looks for this. Bottom of our D to the top of our D, and you can see we actually come right inside of that golden zone once again. So just with a simple Fibonacci retracement pull of all of these waves inside of our triangle, it actually looks perfect. Each of them have a really nice Fib retracement, whether it's the 618 or the 786. And finally, it's very possible that our E wave is already in, as it fell right inside of that golden zone. The very last guideline we like to look at to validate triangles in Elliott Wave is that volume is decreasing through the whole triangle. So if we just take a look from the start of our triangle right here and look at this volume peak right in here, and then compare it to each of the peaks in volume after that. So we have this one, down to this one, down to this one, down to this one, and this one. You can see that all 6 of these peaks are decreasing in volume, which is again another really good confirmation that we have our triangle correct. So from here, I'm going to move forward and assume that this triangle is correct and that our E wave actually is in. It's possible that our E wave ends up putting in another wave downwards here to come to the bottom of this blue line where our A and our C would connect as really good support in here. However, I really like the Fibonacci retracement pull here, and I like that we've already seen this kind of volume peak in here, where if it were any higher and another peak of volume comes in, then we'd ruin the trend of downwards volume in here anyways, which would make our overall triangle assumption a little bit weaker. So we're going to be basing our idea off the concept that the E is actually in. And if the E is in, that means that our 4 wave is in as well. So I now have this labeled, this E wave down here, and our 4 wave finishes right here. I'll turn up the degree on this because it is a higher degree than this E wave. So if we have this correct, our 4 wave is in, our E wave is in, that means we're expecting it to thrust out of this triangle and go upwards towards that 5th wave that we drew earlier. So let's figure out where this 5th wave is actually supposed to be. One of the guidelines of triangles is that when we break out of them, we're going to see a move equal to the largest part of the width of our triangle. Now that's easier to see if I just show you an example. Let's pull this blue line here all the way back to where our triangle starts, which is this candle right here, and along with this one back to that same exact spot in here. Now let's use our price tool here and grab from the bottom of our triangle right here to the top right here. Now before I do anything, you can see that this completes the triangle. This is where the triangle starts and heads inwards and inwards from. So this is the widest part of our triangle, and it's about a $29 width of our triangle. Now all we need to do is take this blue line right here and copy paste it and bring it over to where our triangle is going to break out. For now, let's just assume that's somewhere in the next few candles right here. So somewhere along right here, and we'll take this line right here and put it at the top of the triangle. The guideline of Elliott Wave Theory states that this width right here of the triangle is the same width that we're going to break out from. Now that would be predicting a final target right around $148.75 for our fifth wave to fall. We'll put a target box up there right where we expect the fifth wave to fall based on Elliott Wave Theory and our triangle being in right now. So zooming back out, this is what my projection of Apple looks like. I think we're going to break out of this triangle sometime in the next week or two and head up towards that $148 price target on Apple. In order to get better confirmation of this, we're going to want to see a couple of things. One, we want to break above the high of the D in here, which I actually have labeled as one of our resistances around $122. And then finally, we want to break above the B right here around $125. Breaking above the D will be a really good confirmation that our uptrend is starting and the breakout is happening. And breaking above the B will give us that extra dose of confidence. And lastly, we definitely want to see volume start to head back upwards. It's been downtrending for 3 months. If we can start to put in new peaks in volume in here and break this downtrend that we're looking at with something like this in here, then that'll be the final piece of confidence that our triangle is correct, our 1, 2, 3, 4 is correct, and we are truly heading upwards towards that fifth wave in here. Now, all of this said, you might be wondering what trade I've actually taken to act on this. Personally, because I do believe this breakout's going to happen sometime in the next few weeks, and I think the breakout's going to be extremely strong, I've taken Apple options calls that are dated for January 15th, and I've personally taken the $120 calls. Now you can choose whatever contracts you want and make any decision on expiration date that you want as well, but this is just personally the trade I'm taking. For reference, if we can touch about $148 or let's say $150 for rounding purposes, the $120 calls will reach about 30.0 based on their intrinsic value. If you don't understand how contract prices work, I do have a playlist on options for beginners that you can check out, and this will help you understand better where I'm getting that math and how to understand trading options. And lastly, if you want to trade options with me, I have a link to my Discord in the description below. Feel free to click that and come check it out as we're trading options together every single day. If you made it this far in the video, you must have liked it and learned something from it, so do me a favor and click the like button below and hit subscribe for future similar content. I really appreciate your support and you sticking with me through this, and as always, good luck trading.